Hello, everyone. Richard Adams, welcome to FACE. How you doing, Ingmar, Alexander? Some massive moves overnight, huh? Especially in the precious metals. Crude down sharply, with the dollar not moving much. Okay, so got to give a tip of the hat to Stelios, who said last week that he could see gold falling $100, and that's what it did, more than $100. So I don't know if anyone was up here, went all the way to this low. And, I've been saying for a long time, I thought we could see 22 silver and clean out the stops here. Will that happen? But what do? You just buy it here with stops under last night's low? I don't know. It's almost like it's a lot of damage there, don't you think? APAC? Okay. Who's APAC? A pack of stop losses triggered. Because, we had the signal here. Anyway, to me, what was the most important takeaway from last week, and maybe that's what the metals are afraid of, was we're getting a little pullback in yields today. But to me, this looked like the most important chart of the week. If this low holds, which barely took out this low, and we're on our way up for higher yields, yields are competition for all kinds of investment. What if we get a move like this from here? We're going to be looking at 250 or higher. So I think Friday's action, and when you look at the weekly candle, pretty solid blue body compared to what happened 2 weeks previously. So, I'm thinking this is it for the pullback in rates, where, most things made hay with rates pulling back. The NASDAQ did. Metals were doing okay. The dollar was selling off. Oh, okay. All right. So, this to me looks pretty important. We might get some type of pullback. As you can see, we diverged. This low took out this low by a few bips. So I'm thinking rates are heading up. And that's going to be competition for almost everything. And, I can't short the euro here. I can't buy it here. I was talking about this Saturday. I can't short the gold in the hole. I can't buy it here with, a $70 risk. So, I'm going to sit on my hands until something sets up for me. See what happens with the yen. Yen's down a little after last week's action. To me, it looks like we could still get maybe one more high in the yen for 3, 1, 2, 3. That would make sense if the move in yields was real. Okay. So good morning to you, Ryan. Hope you had a good weekend.
Yeah, hi Dow, how are you?
Good. Gravity today in the precious metals, huh?
Yeah, a bit of a blowout in the low liquidity time. As a guy mentioned, Asian Pacific session, not the best time to be trading, and get a few cascading stops, and that's the end result.
Wow, I think there's something wrong with the structure of the market, that you could have these kind of raids and have basically $100 move in gold in a couple days.
Yeah,
it's extreme, don't you think?
It's very extreme. Yeah, you've been pointing out, and Blake's been pointing out the potential of a break. We were sitting in that tight range, around us, what was it, 1794, 95, that sort of level. We get the break, and and then it just accelerates, and you just probably get someone spooked about the Fed, perhaps. Getting a bit more hawkish. And wallop, that's what you get in that time of night. You get that low liquidity period. No one's really at the market, and wallop. That's what you get. It's good if you're on the right side of it, not if you're on the wrong side of it.
Yeah. What are you thinking currency-wise here going into this week, Ryan? I have no idea.
Yeah, it's after last week we started the week. Yields are in the shitter, let's put it that way, and they rallied back. We tested above 130 in tens this morning, overnight sort of thing. So now, yields are a dip buy, if you like. So, and that's going to keep the flavour of what's going to happen in the currencies. As you said, yen's not really done an awful lot. It seems to be a dollar move on the yields. But, looking at this morning, I mean, maybe we are in the thick of summer markets now. The first day after NFP, Friday is always dead. Euro's been in a 15 pip range. What are you going to do with it? Not a lot.
Yeah.
So even the pound's not doing much. So, I think we've got to wait to see when you chaps over across the pond sit down properly and see what you want to do with yields. And I think that's going to be the driver again.
Yeah, we have some inflation numbers this week. Maybe we'll get some movement out of that.
Yeah, that's always going to be good. We get another picture, see if it's going to moderate a bit. It's been very, very strong. So I wouldn't be surprised if it tapers off a little bit, to coin the active phrase of the day. But again, it could just continue going higher, maybe not as fast as it was before. But that's going to be volatile. A busy CPI number can be sort of 2 pips difference variation. Now we're looking anywhere from 2 to 5 to 6 pip variations in CPI numbers. It's crazy.
Yeah. Okay. Blake, hope you had a good weekend and your son is hanging in there.
Oh yeah, we're doing good. Everybody's fine over here. I'm unfortunately, for those of you that don't know, one of my sons, he tested positive for COVID, but everybody's fine. And actually, I'm taking the entire family scheduled for appointments today, and we should all be okay. We're doing good. So so it's been, unfortunately, because of that, we all were confined to the house because it's the right thing to do, even though everybody feels okay. It's like I might as well just stay home. And so anyway, but thanks for inquiring. It's what a move in gold, right?
Yeah.
Big move. We've been talking about how gold is going to break down, and I didn't expect stops in Asian trade to get triggered like they did. That was pretty big. But I want to point out a couple of things this morning regarding like that gold move. So that gold, obviously, all the stops triggered below 1700. We basically hit that trend low. It comes in around 1680. Now that we're below 1750, as long as we continue below 1750, you've got to imagine that it's bearish. But another way to look at this as well is that if we break back above 1750, then it becomes a false breakdown. Then it's just, that was just triggered everybody, all the stops, maybe even a double bottom. And then, you get a move higher. I'm not playing it here. And oops, let me grab this here. We could do an AB equals CD. That's all I wanted to just double check that really quick, that wasn't the same distance. But just in the event that we, break back above the 1750 level, that would that'd worry me. That at that point in time, I would be thinking, hey, I don't know if I really want to be short gold if I was trading gold on the downside. The flip side to that too is if you see a move like that in gold, then that's got to prevent you from being that's going to prevent you from being short the dollar. Sorry, I was just stretching. Because if you start to see this move happen here, you got to imagine that's gonna feed over into the dollar, and we're gonna see maybe the Aussie bounce back up and maybe the euro bounce back up as well. So I wanted to get actually an opinion here from Ryan. Good morning, Ryan. How are you?
Yeah, morning, Blake. You okay?
I am. Other than I have a case of the Mondays, which
Yeah.
for me is
NSP Mondays as well.
when I, at this time in the morning, I'm sure Dale can feel my pain here. It's when you first get up on a Monday morning, this is you're witnessing what it's like for me. Other than that, I'm getting up thinking, should the dollar continue lower from here, or excuse me, continue higher from here? Should we see lower moves in the euro, the Aussie, sterling's actually holding up pretty well. Should the dollar be, continuing to bounce here after a strong number on Friday, or what do you think? What do you think the dollar is going to do from this point?
Yeah, I mean, as I just mentioned today, I think we've got to have an eye on yields again, because that's back in the driver's seat. We've got the Fed turning potentially hawkish. A decent jobs number. It pretty much ticked all the boxes. When it's used from the participation rate, although that was still low, perhaps, but there's still some catch up to be done. And yeah, I mean, we haven't followed through today, which tends to feel like, okay, we're priced there for now. But I suspect we're going to be waiting to see what these yields do, see what the US wants to do with them, and that's going to kick the next direction. I mean, euros in a 15 pip range all day. Same with the pound; it's not that much better. Dollar yen again, tight ranges. Even the Aussie dollar's sticking tight. The only pairs actually moving some is Euro Swiss. But yeah, it's one of those. If we get above, at the moment, taking just a short-term view, looking at my 15-minute chart on euro dollar, if we can't get above 1770, then we're going to be testing the lows again. And if we break through that 40 area, that 50-40 area, then I reckon we can get pushed to 1700 at least. Unless we get back above 118, then it's going to remain a bit bearish, I think.
Yeah, and so with yields, I mean, can we make the case for stronger yields right now? I mean, can you?
Yeah, I can, but I've been making the case for stronger yields when it was up at 160, 170. We had the blowout. It's confused me because if you look at history of recoveries and how they work generally, you get an economy recovering, you get yields going up because you get a bit of inflation behind it.
Right.
And all the things that go with it, wages and whatever. But, this is such a topsy-turvy event we're coming out of, the way government, central banks have acted, that it's thrown all the rules of thumb out of sync or out of kilter. So, I don't understand why yields were down some 20%.
I think it's caught a lot of the market off. I think it's caught a lot of the market off guard. I agree with you wholeheartedly. Why I don't understand why yields are where they're at right now either. And actually, that's one of the arguments. I don't know if Stelios has checked in yet this morning, but that's one of the arguments that we've had with or the conversations we've had with Stelios is, he's like, he had often said, hey, until yields start to go up, I don't see, the market really correcting. But we, had, and this is, before you joined, the Forex Analytics family, we'd said the same thing. It's like, well, what are yields doing? What are yields doing here, and why aren't they higher? And I don't know. I mean, that's why I'm trying to. I think that. Like I was looking at the 10-year last week, and we made a new high in the 10-year above the 200-day moving average. Relative strength was divergent. So I think if you went long yields last week and you went short like the 10-year bond market, tactically, I think that made sense. But I mean, do you do that now? I mean, is that what you do? Do you continue that trade?
Yeah.
Or do you back off? So I don't know.
Yeah, I mean, I'd be a selling as a few of us line up if we get back below that, 115 down towards 110 area. But you've got a reasonable bottom in place there now, double bottom. You can almost call it a triple bottom down around that, 130, 1.13 area. And yeah, I mean, if we get above 130 and hold above 130, then perhaps we start changing the picture. But this has been a trend that's been going on since March this year. And you can't see one NFP report turning it around and a couple of Fed speakers. So it's in the balance still. But as we've been saying, are there some fears about stagflation in 2022? Is the market looking ahead? Are we still waiting for this September, October, November period to see what the jobs market is really going to be like after the support schemes come off? We sit here circling around, the sort of same conversation. It's sort of time game. We're all sitting here waiting to see how this stuff resolves. But in the meanwhile, we trade what we see in front of us, and we trade screens and trade levels and what they show us.
So let me ask you this. So what do you feel, or how do you feel about the inflation data that's coming this week? Is that what your focus is going to be on this week, Ryan?
Yeah, definitely. I want to see if it's going to continue, or it's going to moderate, or even if it's going to pull back. I mean, if you get a sharp pullback in inflation, which is entirely possible with the amount of volatility that's in inflation numbers at the moment, are we going to see another shift? Because then all the hawks last week, the market hawks from last week, who are thinking the Fed are getting closer to taper, are going to go, oh, hang on a minute, and maybe they get a slap and we see yields drop again. But if we see another higher print, then people are going to go, hang on a minute, this transitory stuff is rubbish. Just now we're 8-9 months into high inflation and it's showing no signs of abating. How high has it got to go before it starts wearing out? And what level is it then going to drop to when the transitory stuff does come out of it? Because we know there is transitory factors in there. You don't get lumber jumping up as high as it did and falling back without it washing in and washing out of inflation numbers. And there's always a lag, remember, between when you get spikes in prices like that filter through into the CPI numbers. But the longer, as I've said before, the longer you have high inflation, the more it feeds through and feeds down the chain right the way to the end. And when it gets entrenched at the end, like the consumer level, where you're going to the shops and you're paying, $1 more for a loaf of bread, or, you're paying more for your gas, or you're paying more for your cars, or whatever. When it gets to that end, that's where it becomes difficult for it to become transitory, because once prices go up, it's hard to take them down again.
Yeah. And that's it. You're right. It is really hard to take it back. And that's where, the stagflation fears really come into play, because it's like, okay, is this growth really going to continue? Or is this just kind of like an adrenaline shot in the arm with what all the central banks have done? Or has it permanently really, put a I don't know how you say it, put up, just the growth on with an accelerator, if you will. And actually, I think Steve or Stelios are probably here right now, and I'm sure that they have some opinions on the stagflation, front. Good morning, guys. Are you here?
Yes. Good morning.
So, Steve, hey, good morning, Steve. How are the fires in Greece right now? I know it's been a big
situation has improved.
Good.
The situation has improved. It's still, some of them are ongoing, but definitely we're on the right track at the moment. But there's already been a huge disaster, and you know how it is. It's not like they're going to grow back, in 2 months from now, right?
Yeah. I mean, the fire season here in the United States has been out of control too. So I'd say I hope Greece is one of those places that I just hope that it continues to stay intact. So, hey, so I wanted to ask you, how do you feel about the stagflation debate? Do you think, or do you think that we have enough economic growth globally that will, avoid, the stagflation fears?
First of all, we have no economic growth globally. Whatever growth we have is, I think I couldn't have said it better. You said it yourself. It's an adrenaline injection into the arm of the economy with amounts of money that we've never printed in the past, ever, in such a short period of time, right? And we're seeing the side effect of that. Will the economy bounce back to some kind of normality post COVID measures, of course. I mean, there was no question. It's not that economic activity would remain at the horrific levels we had like a year ago. There was no chance of, of that happening. But rebounding back to what? To what we had already explained, that it is an economic reality.
Can you hear me now? Sorry.
Now we can hear you, Stereo.
Okay, sorry. I don't know what's wrong with my Zoom. Okay, got it. Thank you.
It's okay. It works now, mate. That's what matters.
Okay, great.
So back to an economic reality, which is anyhow unsustainable, because there's been a long period of time now that in order for us to create 1% of nominal growth, we've had to create on a global scale, right, on the developed world, more than the equivalent of debt. So, that's long-term unsustainable. What I want to focus more is the amazing move we've had in the precious metals being, once again, a very weird type of activity. There was a 4 billion notional gold, for example, being sold at the most illiquid hours of the day. We've asked this question 1,000 times with Stelios already. Who wants to get rid of 4 billion worth of gold and can't wait 12 hours to do it in more liquid hours and creates this kind of
it seems like a forced liquidation. I mean, that's all it does to me.
Forced, that's a good question. Why would anybody want to pick a 2-minute window to dump everything?
Yeah,
I remember when I was, you guys know, I used to be a market maker. At some points, I had to make huge trades, and it was very strategic, right? You had to pick your moments, high liquidity, and do it a little bit at a time. Don't make sure the market doesn't get it, etc. And this is exactly the opposite. So it makes no sense to me. It really does.
You know what it smells like? It smells like, someone knew someone had to do something, and they pushed them into it. So if it's like in the old days still, you get a sniff that some bank or someone's selling a lump, and you push them and you feel them out and you try and get them to trip it lower, and then you're sitting on the bid well below. So it smells a bit like that. I mean, because you're quite right. Who does that at that time of night?
You know something? I find it very weird, Ryan. We've been monitoring precious metals for such a long period of time, right? And during the past, what is it now? We in essence bottomed out in gold in 2015, right? So we've been during the past 6 years. Let's take gold as an example. We've been either in a strong uptrend or periods of consolidation. That's the environment we've been in gold for the past 6 years. Now, despite being in a more or less upward trend for these 6 years, count the number of times that you had these weird moves happening to the upside and to the downside. And you'll see that there is a spectacular ratio between the two of them in favor of the sell-offs, the weird illiquid sell-offs.
Even worse, Steve, count only those times which are very liquid in Asian trading. And it's like 95% downwards. Anyway, the question is, what do you do with this? Okay, because I've been saying, I want to see a 23 handle to consider buying silver, because I'm already a little bit long. It's quite a bit out of the money, but you know how I operate. I'm on leverage and I accumulate. I'm not buying anything yet because this move was pretty vicious, and we bounced hard from the bottom, but it was so vicious that I want to see how things develop. But I am close to basically pulling the trigger and buying just a little bit more, and then
wait. Can I just say that based on what we're looking at, and forget yesterday's move, forget like the move last night. Let's just go back to previous to that. Okay, this is like a 4-hour chart. I mean, we broke out of a triangle, and we talked in nauseam about the extent of this breakdown here on Friday, as this would be a range extension, double top, range extension, takes us down to 1750, right? Yeah, on Friday after the market, closed. I mean, we were trading down here at 1775. So no one, if you're an active trader, now I understand, Stelios, you take a much different approach than most people, being you're acquiring longer term positions, but no one from a trading perspective, if you were watching this on Friday, this webinar, or you were in the Forex Analytics chat rooms, or you were trading post non-farm payroll, no one should have been long that pattern.
Very true, Blake. There is no question. The short-term
No,
bend,
so if anybody was
lower,
if anybody got hit yesterday, you just straight up didn't look at what you didn't look at the developments. If you were long and you got hurt in this run, which you shouldn't have been on the wrong side of that move. If you did, you blatantly ignored what was in front of you. And so I need to point that out.
That is very correct. Still doesn't excuse this type of weird activity.
It doesn't. Right? No, it doesn't. And I agree with that. But if you're trading it last night, I mean, really the only, in my opinion, unless you were completely gambling last night, the only place you should have even been considering being long the gold market would have been, these are the trend lows. It would have been somewhere below 1700, probably close to 1690. Like if I could see, and I was with my family, and we actually took a bike ride last night because it's hot as all get out, and we had to get out because my son hadn't left the house in a few days. So we were not around when this happened, but this move below 1700, I could see somebody going, okay, we were down there and I'm going to take a risk, just a very, very low risk reward long, but you shouldn't have been on the wrong side of that. No one listening here should have. I just need to point that out.
No, you're right. But then, we've got to look forward. So you've got the 4-hour chart there. Can you just ping up the 4-hour chart there? And if you just zoom into that spike move on the 4-hour. Right. So where I'll be looking now is around the bottom of those first 2 4-hour candles. See where? Not forget that wick. So just the bottom of those candles. What are we looking at? We're looking at around about 1733 ish. That's where I'll be looking for the price to hold up, because that's where the candle, the main body of the candle stopped on the big shift down. The secondary 4-hour candle to that, the low of that is around that 1733. That's now given us a confirmed low after the original spike. So that would be my first place I'd look for support. If we're gonna not go down further, 1733 around there is where I want to expect to see support. If we break through there, then we're heading back to those lows. And on the top side, like you said, 1750, 51, I've got a bit of a zone up to about 64, 65. If we get above there, then we're turning this around.
And I couldn't agree with you more, Ryan. If I was trading gold, which I'm not, by the way, but if I was, that's how I would trade it too. Above 1750, you look for a squeeze, and then you got a false breakdown back below like 1730s, 30, as you pointed out, 33, somewhere around those. And these are the lows that Europe's finding support. So Europe's finding value, quote unquote, value in gold at the 1730s. So now a break below that, and now you have a problem, right? You got all the people that are in Europe, and I'm obviously in the UK, Europe, anybody in that time zone who's been like, oh, I'm finding value in gold down in the 1730s. They've been buying. So where are they wrong? They're wrong below there. And so now, as you pointed out, this is a really great strategy on knowing exactly how to play gold from this point forward, because you're right. We can speculate about, oh, this happened, that happened. Well, what do you do now? And that's exactly, and these are the types of conversations, by the way, and this is, I'm going to pass it over to Dale right now. These are the types of conversations that happen in the Forex Analytics chat rooms. If you're looking in, you look at, all the conversations between Ryan and his guys that have come over, and in the trade rooms and, our general chat rooms, these are the conversations that happen in the Forex Analytics community. So with that being said, make sure you guys take advantage of Forex Analytics, because as of today, I think we're going to be removing the special pricing. We have buy 1 month, get 1 month free. Semi-annual and annual subscriptions are available to everybody, but we give them mostly for our folks that have been with us for a long period of time, so they can have a discounted rate. So take advantage of the pricing because it's going to go away. And then I don't know when the next time we're going to offer a special price. So Dale, Ryan,
Yes.
Steve, Stelios, thank you guys for your input.
Thank you,
Thank
guys.
you,
guys.
everybody.
Thank you, Blake.
All right, we'll see you on the, we'll see you guys on the Morning Edge, which is a Forex Analytics only webinar in 45 minutes. And we'll go in through very detailed analysis through all the major currencies. I'll see you guys there.
All right. Good hunting, Blake. Steve,
Thanks,
you want
guys.
to add anything? I just spoke to, texted Alexander. He's not in here yet. Anything you want to wrap up with?
Okay, will he be
Oh.
here, by the way? I mean, is your guest actually coming, or he might not
Yeah,
be
he's
at all?
coming. He's coming.
Okay, nice. No, I didn't really want to add something. It's
Okay.
what we said before. It's technically speaking, the follow through in precious metals to the downside makes sense because that's where we technically were. But the type of sell-off we have and the method, with which it was executed, they're extremely questionable. That's it. Extremely
Okay.
questionable.
Yeah.
Other
Okay.
than that, I don't think it should be surprising that we're still seeing a move in that direction. I mean, even Stelios and I, that we're bullish. In the short term, we remained bearish because that's what price tells us, right? I do think though that this type of a move might bring a bottom sooner than expected. You know what I mean? We've seen frequently moves like that being exhaustive. So let's see if that's the case here.
Okay. So Alejandro's here. I'm going to make him a panelist now.
Perfect. Enjoy the interview. Are you a little bit cold? Do you have a cold or something? You sound a little bit.
Yeah.
Okay.
I hope that's all it is.
You're vaccinated, aren't you?
Yeah. Anyway.
It should be okay in either way.
Yeah. So yeah. A summer cold. So Alexander, how are you?
Good.
Alejandro, how are you, buddy? I'm
Good,
a
I'm
little
all
foggy
good.
headed today.
Yes. So now we actually have. I'm also having a cold. Yeah.
Did you go get tested? Should you go get tested when you have a cold? I mean, who knows what you have, right?
Sorry, I missed you there. It logged me in and then out again.
Oh, I mean, did you go get tested?
Oh yeah. So so what happened was that I went for first proper holiday since October of 2020. So we went to Croatia. So it's like 32 degrees, like next to the coast, swimming in the sea every day and so on. But my little boy, he's 3 years old, and he got something at nursery. But to fly out and to fly back in, you need to do all these tests.
Yeah.
So we're negative on both on flying out and then on flying in. And according to the UK government, you need to do a third test. Well, you'll do a third test when you arrive. So I'm going to do another one, like a PCR test in the next
buddy.
1 to 2 days.
Hope everything's okay. So, I do remember from the last interview, you presented VIX and you also talked about August. And so here we are, that there could be some volatility. I mean, it's showing up in other instruments, showing up in gold. And did you want to share your screen?
Yeah, sure.
Okay, I see your brokerage firm on there.
Oh yeah,
ATFX.
that's yes. Yeah, I was surprised to see that myself. I represent ATFX.
Right.
So let me see. You should be able to see my screen now.
Okay. Ethereum. Okay.
Yeah. So you were talking about the VIX, right?
Yeah.
Yeah. So I mean, volatility is a bit tricky, like in the summertime. Just in general, I think is people get really excited about the summer, but really it's just time not to trade. Really, I noticed at least. What I'm focusing on right now, because I was away last week, so I was trading a bit of Aussie dollar versus the Japanese yen. So we had, as you might remember, we had a bit of sell-offs just recently. So we had this sort of double bottom range breakout where we slid to the downside here, as you can see, on this daily chart. So I shorted on the correction here, kept it for down here, and then I actually held on to it. And then when we move, I think we moved down here somewhere here, I think it was, I closed out just in the beginning of August, because I was not going to be at my desk. So I just had my mobile. So I closed out that position, and that was sort of a bit of a trade on risk off and so on. But what I'm focusing on now, what I notice is that, you have the cryptos being really, really bullish. Yeah. I mean, if you look at something like Ethereum, for example, but also Bitcoin, things are just going up and up and up. So even on shallow pullbacks, people are quite happy to buy. So you start to get a bit of a vibe like of that maybe the bull market has resumed.
Yes.
So what I'm doing now is actually I bought crypto.com. It's called Crow. So I bought that.
What is Crow?
So crypto.com is an exchange broker-ish. I don't use their services themselves, but a lot of these exchanges like Binance and also like FTX and crypto.com, they have their own coins that you can use to pay fees, so get reduction on commissions and things like that. And also some, in the case of Binance, they have the coin works a bit like Ethereum does in different applications. So you tend to see so this is a different way of investing. So the thing is this though, it's the correlation between all these cryptocurrencies are super high, all of them. So obviously one should try to avoid some of the sort of there are even smaller projects like this, when you had DeFi, decentralized finance, when that was cropping up, like you had Pancake Swap, and then you had some other alternatives as well. I tried some of them actually, but they literally lost like 99.9% of their value. So if you can avoid like the smallest of coins, I think everything else is pretty much the same to some extent. So what I'm looking for is I'm just looking for patterns. So say, for example, that Bitcoin, like I thought Bitcoin, I was hoping for on this daily chart here that Bitcoin would go up and get rejected by the June 15 high and then push it down and then up. So then we would have like a double top break. That didn't happen, but we're still bullish. So when I see that Bitcoin is bullish, I will either try Bitcoin or I will try to trade something else. In the case of crypto.com, you have a bit of an inverse head and shoulders and alternatively an ascending triangle, depending on how you look at it. But this could be like head, left, right shoulder, and then you had the break here. Now, full disclosure, I did trade it here already and I got stopped out, but then I bought it here a bit later and I'm still holding on to this one. So this is one example. You have other things like waves, for example, which is in a bit of a rectangle action range, sort of. You have Atom USD, which I think I prefer even more, which is a bit of a ascending triangle. Yeah. This one is more clear cut because the levels are the same levels. You got 1, 2, 3 levels there. And if this would break to the upside, right? So obviously a lot of people would measure the base, then you get a certain target, which could potentially be applied here. But most of the time I will just take the midpoint of the pattern like this. And then we're looking for a push to the upside.
So have you turned to these because the legacy markets have dried up, ranges, etc.?
Yes. Yes. They're I mean, yes, that's true. Right now, legacy markets are not really doing too much. I'm hoping that come September and there will be more action. There are some interesting things though. How
about what happened with yields last week and the week before? There was an attempt on the 10-year to bottom at 113, went up, and then on the NFP, it also, before the NFP, had traded down there and reversed and followed through. So what do you think of this being the end of the correction of yields coming down and we're on our way back up to maybe the old highs?
I mean, the NFP number was really good, and for me, I personally think it's a matter of if, and not like they will reduce the quantitative easing program. I mean, that's going to be gone at one point. I don't really want to think so much about raising interest rates because that could literally take like 2-3 more years. But that's going to come to an end. This EC monetary policy we need to come to an end very soon, and that would obviously put some pressure on interest rates. And if not, inflation, will continue to circle back and keep inflation high, right? So yeah, I think ultimately up, and I think just from a dollar perspective, if we look at it from that perspective, I don't actually follow the yields like that much, but from a dollar perspective and the dollar index, for example, I am still a long-term dollar bull. I do think that it makes a lot of sense for the dollar to gain. Now, obviously, the market is not really sort of agreeing with me, and unfortunately, we're stuck in some sort of a range here as well.
Yeah.
And when this happens, I just zone out. I just sort of ignore it a bit until we start to see some sort of move.
I like that. Nice look.
Yeah.
Any commentary on how fragile the gold and silver markets were to give up so much ground during an Asian session? I mean, it started here in the States last week, but last night was a massacre.
Yeah, I saw that. I was quite surprised to see that, actually. It's a very sharp drop. It feels like someone doesn't really know exactly what they were doing, or you just had a cascade of stop loss orders triggered. You'll see this a lot in cryptos because the liquidity is so low. Like even myself, sometimes when I try to push an order, like I will spike the price on the 5-minute chart or something like that. I did that in the beginning, by the way, just because you can't push through a big order. So you need to say, okay, I want to buy for 10% now, 10% there, or you need to put a limit order on it. And it feels like this is a little bit what happened. And then it's summertime as well. It's Asian session. I personally think this is the time of false breakouts, and false moves, like this time of the year. So I wouldn't
trust anything.
Yeah. I wouldn't trust this one. We have some funny looking triangle pattern here, that does suggest we could go down to 1852, but it wouldn't surprise me at all if this candle will be pushed higher and then it looks like a false move, and then suddenly everybody's gonna get short squeezed up, and then we sort of get stuck in the middle here again.
Yeah.
So there's different ways you can trade this one if you wanted to. I mean, maybe give it a day's rest, and if we're still sort of trading around these levels, then you could potentially, short with stops above here for this to go down and maybe try to test this low again. But I would give this a bit of a break.
How's copper look to you, Alejandro?
Let's take a look at that. I think I looked at it this morning, and
it's like it's trying to put in a right shoulder of a potential head and shoulders top. I was wondering if you were showing that too.
Let me see here. I think this one should be. Oh yeah, I mean, yeah, definitely. Yeah, you mean the right and head and left? Yeah, definitely.
Yeah,
it is. Also
so we're getting a rest in things like oil and copper, economically sensitive commodities. They're worried about Delta, maybe not as much in the Western developed world, but maybe Asia.
I think as well, you see what happens is that when you had this aggressive economic growth, like the ISMs were going up and up and up. So when that's going up, and then when that ultimately peaks, that's when production is at its highest. And then one would argue that all of these coppers should be at their highest point at that situation. And after that, what happens is it cools down, right? Because you go from a lot of people losing a lot of jobs to a lot of people gaining a lot of jobs, but then the ever increment growth after that becomes less and less.
Right.
And I think that's a little bit what we're seeing right here, right now.
Okay.
But so I find quite interesting though is that you have things like Dow Jones, being bullish, and there are some opportunities there for people that can trade these markets. You have a bit of an ascending triangle-like pattern here as well.
Yeah.
Like you have sort of the break here. If you consider this high, if you can take that into account, but also these levels here, and you have a very similar situation here in the German DAX. And it's always good
Yeah.
to, when you have something relatively similar on both sides of the Atlantic,
Right.
where you have a big ascending triangle, and then you have something more exotic that I also sometimes consider, which is the South African Stock Market Index, where you have a nice, beautiful rectangle here as well. So it's interesting. I might give it a shot, put a bit of risk, maybe like 1.5% at most, to see
Okay.
if these stock indices can go upwards.
Okay,
Yeah.
buddy. What's the best way for people to pay attention to what you do on Twitter or be involved in your webinars that you do and learn from you? What's the best way?
So there is obviously my Twitter. So I do a lot of content there for on behalf of ATFX. So I do 2 videos a week where I talk about patterns and different things that I like and follow. So
Okay.
you can check that out. It's on AlexFX00.
Okay.
And
Nice.
and if one would find that interesting, like if you want to learn more about that specific trading strategy, then I have my own website called londiniumfx.com. So what I do there is that every morning I take a look at the different patterns I have identified, and then when I trade, I send a message via Telegram telling people that, look, I'm trading this now. I'm putting 1.5% risk. That's usually what I risk. And then, if I get stopped out, I'll let people know. If I get a winner, like any small changes as well, I'll tell people.
Okay.
So it's good for someone that likes to follow trends. And I trade on the daily and the 4-hour charts. So for someone as well that maybe wants to trade a few times per week, but not necessarily every day. And it's a trend following system. So last year, for example, we did really, really good. This year we're up, I think, about 49% or something like that. We're up a little bit higher at one point. But when you're a trend follower, it's important to understand it's almost like I'm running like a retail shop, and over Christmas, you do like a lot of sales.
Yeah.
So it's a little bit like that. Some years you're going to have triple-digit returns, and some other years it's going to be maybe double-digit. And sometimes it could be literally like 3 months with really no profits, sometimes a bit more. And I have had losing years as well. But overall, since sort of 2014, since I started to use this system and various variations, we're doing about 33% return per year. And
Nice work.
thank you very much. Yeah.
Thank you, Alejandro, for coming here and sharing. I know you wanted to go crypto on us, so because that's where the action is right now. But we got some good looks, and kind of understand your style. That when you have Bitcoin strength, you could look for some of the other candidates to ride that trend.
That's correct.
Yeah, and you're constructive on the dollar still. So appreciate you being with us today.
Yeah, thank you so much. Thanks so much for having me on.
Okay, buddy. So my trading warrior brother, Alejandro Zambrano, can follow him at AlexFX00 on Twitter, and an excellent technician and tactician and experienced guy. So I appreciate it very much, Alejandro. Thank you.
Cheers. Thank you so much. Speak soon.
Okay, guys, and that's going to be a wrap. David Hunter will be with us tomorrow. David Fine, I believe, tomorrow. And don't just count your pips, count your blessings. And we'll see everyone for Turnaround Tuesday. Okay, you're very welcome. Adios.